What is going on, everybody, and welcome to another weekly update. And in this video, what I'd like to do is provide you some insight into the upcoming week, whether that's earnings, the Fed meetings, or potentially some event that I can feel change the dynamic of the market. So if that sounds like something you're interested in, consider subscribing, as I do provide daily updates as well to get you prepared for the day and the week ahead in this phenomenal market. So there's a lot going on, and a lot of people may be wondering, well, why is the market pumping? It's a good question. But to even look at that, I'm going to throw this up here real quick just so I can kind of get off a little bit on a tangent. But there is a lot going on, right? We did get another historic 75-point basis move. We were estimating a 75-point basis move. And that being said, that's a very historic back-to-back 75-point basis move. Now we have to understand that the repercussions of what's currently going on with the Fed is not going to really take place. You're not really going to see the effects of it till Q3. You're currently in Q3. We're reporting Q2 at the current moment. Now, yes, we did start stacking interest rates back to back. But now we have to understand that after this last one that we just had this past week, we got 2 months before the next Fed meeting. So that leaves a huge window open for the market. And so what the market's going to do now is it's currently right dead smack in the middle of earnings. You just had your big tech. You got one or two more big weeks, some bigger companies, and then it'll start kind of slowly filtering off. Yes, there's earnings essentially all throughout the next couple weeks, but the major players have already gone. A lot of the major players this week, we did get again Amazon, Apple, which did extremely well. There's a lot of cracks. You have to understand there's a lot of cracks going on there, even though a lot of these estimates are like super low. And this is what you have to understand, that yes, we're hitting expectations, so that's all good. But if your expectations are down in the dirt, right, anything is good, anything is positive. And so with all that being said, we are in earnings mode, so we'll continue to pump. I think we're trying to squeeze in as much of a rally as we can until the next meeting. Now, one thing we need to pay attention. What are we looking at next is the next question. We're going to continue watching earnings. I'm going to continue playing continuation plays on the markets. And one thing to consider here, I probably should have actually started with this, is the fact that you have to be, if you're going to be an active trader or a day trader or a swing trader, and not just an investor that looks 5 to 10 years out, you have to understand that you have to you have to be neutral. You can't be too much to one side, and know when you are wrong to adjust, right? The quicker you can adjust to know when you're wrong, the quicker you can adapt. That's why risk management is keen, because if you keep getting tagged out, that is your telltale sign that maybe you need to adjust something. You should have a process in place. So when that process, if you keep hitting the red because things just aren't playing out, so then maybe you need to adjust and play the other side. Yes, the current market sentiment is down. It will be down because we've been going down for the past couple months. So with all that being said, what are we looking for here? The next biggest thing, in my opinion, I think we're going to continue to be bullish. Potentially, some technical wise, it doesn't look bullish. We could get rejected pretty hard and start coming back down. But being said, I think the biggest thing we need to look at next will be before the Fed meeting. The next Fed meeting isn't going to be till September 20th and 21st. But we need to be looking at the core CPI, which comes out August 10th. That is going to tell us if the headline inflation at 9.1 is going to be higher. I expect this to potentially go up to 10 plus, if not more, if something isn't changed. Now, why do I expect that? Because you want to, if again, talking about the last week, we talked about headline inflation, the difference between headline inflation, core inflation, and why headline inflation is currently running. Now, my thesis into all this is the core inflation is running because of fuel, because of oil. Now we are tapping into reserves Those reserves are being refiltered with not the greatest of oil, right? And you have to understand this. So if there's some cataclysmic event that happens, we're going to be pretty screwed at that point because our reserves aren't the greatest, right? And there's a lot of stuff that goes into these oil reserves to make sure the oil is correct. From my understanding from some of the people that I have talked to. Now, with that being said, oil is going to continue to drive. You still got the threats. Russia continues to threaten oil and shutting things off. This is going to cause major repercussions within Europe. Yes, we can be self-sustaining, but if the world is falling apart, it's only a matter of time before we fall apart. We may be able to sustain it a little bit longer, but we're going to fall apart with the world. It's just not. We're just not going to separate ourselves that much that it's not going to affect us. And so, being said, what I'm talking about in my thesis plays out in a matter of months. It doesn't play out each and every day. Yes, I have a daily thesis and I have a bigger overall trying to big macro view of what's going on and trying to understand where we're headed. And I think there's still a lot more downside to come. Now, we just haven't gotten to that point. I think we'll start seeing, because we're seeing cracks now, I think you actually start seeing breaks in Q3. Very potentially when you start looking at headline inflation if it continues to run past 9.1. So that's why I am very keen on that core CPI, particularly the headline, seeing where food and energy is, seeing if they continue to skyrocket. Because if your basic necessities is skyrocketing, it doesn't matter about any other stuff. Yes, inflation will come down on the other stuff because you are just paying for what you need. And that's what I don't think people are missing here is the fact that people are missing the fact that your basic necessities are flying through the roof. And so you're going to put everything else on credit cards and you're going to limit some of that spending. So you're also seeing credit cards companies just absolutely destroy it. Their growth is ridiculous. And understand that people's savings are way down. People are losing jobs. There has been major cutbacks and continue to be cutbacks left and right. So the red flags are there. But again, the market will disconnect from the economy until it gets that one piece of news that isn't expected, right? And so you got to give it potentially another month, another quarter. And then people will realize, oh, well, our expectations are that everything was okay because, what also happened this week is the Fed started talking about redefining what a bad, what a recession was. It's not having 2 negative quarters of GDP, which we have. So technically we could be in a recession, but they're redefining it. So it really depends on how you define it. But my thing is GDP, I think, I could almost go along the lines with the GDP aspect of it. I'm more looking at the companies. How are the companies doing? Right now, I'm seeing cracks. If we see breaks in Q3, that's my sign that it is full on going to get nasty because you're seeing cracks in the infrastructure now. And now, can it be held together? Can it continue to go back up? Potentially, but if the food and energy continue to go running through the roof, all the rest of the stuff, yes, it's going to show inflation coming down, but it's because people are paying for the basic stuff. So all being said, we got non-farms on Friday. That'll be interesting to see really what's going on with the market and employment and kind of seeing what is a true sign, right? Because there's so many jobs. Yes, there's going to be tremendous jobs, but also the great resignation, right? So people aren't going back to your regular 9 to 5, and they don't count people that are doing their own thing, right? So yeah, there might be a lot of jobs out there, but those jobs require, right? They're looking for like the best of the best of the best. They aren't looking for, the average person. Sadly, that's what they're doing. So the average person is struggling, running on credit cards and doing all these other things. You have to also remember too that for 2 years, people got free money, right? You develop habits after 90 days. So for 2 years, you've instilled this habit that you have this extra money. Now you're not getting it. So where's that money going to go? It's going to go on a credit card. Now you're seeing the effects of how this is playing out and why this isn't looking so good and could potentially get really bad. I'm not saying that it will. It can, and there's a high chance it can. And so that is what I'm trying to say. What I'm trying to say is you have to be adjustable. Right now, the market's pushing up. I'm going to be bullish short term with the understanding that at any point this thing can flip and just start selling. And you have to be mindful of that, because all it's going to take is one piece of data that's off. Oh, we didn't expect that. And then the market's going to sell. So here we go. So with all that being said, so core CPI, we're looking at for August 10th. FOMC is not till September. This week, strictly looking at non-farm payrolls. Upcoming earnings this week. Again, there's still a lot of really good earnings. AMD, Oxy, and Airbnb are what I'm looking at Tuesday. Moderna potentially on Wednesday morning. Baba potentially Wednesday morning. AMC and Twilio. Twilio is going to be an interesting one. I don't typically play this, but the cloud space has been interesting. It's been ripping. It's been dropping like crazy. So I think it could potentially provide a good play this week. Watch list. Again, this is going to be really adjustable this week. Again, all these earnings I'm looking at, so they very well could change here. But I wanted for this watch list, I really wanted to keep this. I should probably like to change this to a watch list to something more like the basics, the industries that I'm looking at, and the point moves in here, because it's interesting to watch the point moves that are essentially being priced in during this week. So SPX, we got 80, Tesla 53, BA, Boeing 7, and JP Morgan at 3. So they're not really expecting it's coming down a little bit, but you're going to get more value plays this week. So I want to see how that plays out during this week. I think we could still get amounts of ripper with some tech, especially particularly with Apple and Amazon, but we'll have to see, because once we look at technicals here, you'll kind of see what I'm talking about. And so SPX, this is an interesting spot, right? We have this hard resistance. It's essentially at 41.92. So we're currently kind of sitting there. I could potentially say we're kind of hitting it now. Maybe we have a little bit more headroom here to potentially push up. And that is your 200 EMA and your 50 EMA on the weekly. So you got your 200 on the daily and your 50 EMA on the weekly. If this thing touches all the way up here, it could get rejected really hard and come down. But the thing is you get a break here. This was a tough resistance here. It broke the 40.81. Monday, could see some selling down to this point, and then potentially start ripping back up to try to hit this. Again, first attempt, you're going to get rejected hard off of that. It could be reversal back down. I don't know. Now, this is another big thing, too, is a lot of people are pointing this out. I've seen a lot of charts with these breaks here, and something I keep reiterating this year is these breaks just don't play out. This one's actually playing out a little bit more than what it typically does, which could be a good sign that maybe we are starting to get bullish again. But actually, it's not a first attempt. You had your first attempt here and got rejected. This is a second attempt, so you might get a little rejection. But if we can break that and get over that, we could potentially start heading back up for something good. So we'll see here. Potentially all-time highs. It's really hard to tell at any point, right? We could potentially start running, and then if that GDP is bad, that will be interesting. But again, you're in earnings cycles, so that's something you have to understand. Is after the earnings cycle is done, so we might have like another solid week of running, and then realize that the earnings cycle is going to die off. So your big tech will start selling off again and getting in preparation for the next earnings cycle. Not to say that it doesn't pop up and down, but the bigger moves will happen during that time. So we'll get some selling, some pulling back for 2 to 3 weeks, just like chop and drop, and then you get your bigger massive moves to the upside, again leading into earnings. So that's what I got for XPX. Again, interesting spots. Bitcoin, same thing. This is something I've been talking about, right? Like it's the first reattempt, roughly around the 26. You're talking about the daily, so this thing can pump pretty high. It can pump up to 28. Then you can get rejected there. Maybe not so much here. You could get rejected here. Started seeing some rejection here. but maybe it could even pull up to the 30K mark, get rejected hard and sell off. That's what I'm concerned about, and to not get too hopeful this is a full reversal, because if you're not managing risk, right, and trying to be neutral here, if this thing rejects here, and this is something I talk about, if you get a break here, right, my stop is right underneath here. That's the support. So if this thing gives a fake out wick and then comes back down, breaks, I'm tagged out, and then it starts selling, right? Or maybe it is a reversal or a semi rally, so it pushes up to here to the 30K. Okay, well, I'm going to move my stop as soon as this thing is pushing up, and then slam it right underneath here. When it gets really close to that resistance, I really tighten that stop. Then if it wants to reject, it tags me out. So maybe it takes off, but I captured a bigger move, wait for the next break up, because now you're starting to go through a lot of resistance. You're going to get a lot of pullbacks and rejections. So then if it breaks over, then I re-enter, throw a stop underneath, and keep going, right? Not just hold it all the way up, right? Because you could hold it all the way up here. Then some news comes out and it flushes all the way down. You gave back all those gains. And so that's my point there. The dollar still it's showing a little bit of weakness on Friday, but it's still very elevated. So we have to keep an eye on that. Oil is still ridiculous. The oil is still floating around 100. So again, as long as the oil continues to float around $100 a barrel, I think that core inflation is going to be a major issue. And again, if there's any kind of lockdown or anything like that, or stopping of oil into the EU, that's going to be a big issue as well. Let's look at Tesla. Tesla this week, looking really solid. Captured some of these bigger moves down here, and then I missed that last drop before it really started to rip. So kind of watching back here for the 838. Looking, you get the break, see if we get a retest, a pullback on Monday. Tesla normally when it starts ripping, it doesn't really have big pullbacks. It just pulls back a little bit and then continues to rip. But we got some resistance up here at 937, and then again, I'm kind of looking for support around here at 826 to potentially grab it and then write it right up for some bigger gains, because it's been a while since we've actually seen Tesla be this strong. It's had, Friday was extremely strong, but to see this nice move, because we keep getting this chop and drop. So, and this massive ripper here. So watching this on continuation, I want to see how far down it can come. If it does drop, I think we can get quite a bit of a pullback, since we had a nice pump on Friday. Again, seeing if it can hold the 854. If it does, take an entry and then try to get it at least up to the 900, 920 mark potentially. Is what I'm looking at for Tesla this week. Apple could be a good one. It did had one heck of a pop overnight, a gap up. So seeing what this does, maybe we can get a retest. Again, another retest. We did break that resistance here. That's why I have this red mark here. So you're looking at the 157. If you can hold the 157 on Monday, I think this thing can start ripping back up, 165. The nice thing is about this, again, it does well. So whatever, it's obviously a well-known brand and name, right? And so the dips are always bought, so it helps on any place to the upside. So it's just waiting, looking for that entry, and then sticking with that entry, and then continue to ride it up. Again, Apple's recovering quickly. It didn't sell off. It took a lot for this thing to sell off, and it was holding at least the 129. So I want to watch this week and see what goes on with that. Airbnb is a big one I want to watch. Looking for the reversal here. So I'm really looking to see if this thing can hold roughly the 110 mark. If it does, kind of looking for a pop up to the 123 mark on Airbnb. Again, it has earnings, so you got a little bit of premium built in. Normally for options contracts, if you can get it on Monday mornings of the earnings, those are particularly, or anytime during the morning before later in the day, and those things typically run, if you're playing weekly options, those things run quite a bit. But again, we have to check the market sentiment Monday morning and see how it is. Sunday markets do open. You can see the futures, but it really just depends on what news and everything that happens come pre-market before open, and then take it from that point. So I want to keep Airbnb on watch. I think it could, especially with all the, this is another thing to consider too, and why I like Airbnb is the fact that a lot of the credit card purchasing going on has been on travel. And so I'm thinking a lot of people might be buying an Airbnb. So Airbnb might have a really good earnings that's not expected. And so this thing could potentially have a big run this week. So that's why I really like Airbnb going into this week and seeing where it goes from there. And then I think that is pretty much it. Again, it really just depends on the market sentiment. Those are the particular ones I'm looking at. I mean, I can bring up the banks real quick just so we can look at them. But JPM is doing a little bit better. Again, I don't like the chop on JPM. Goldman Sachs has really been leading the charge on banks. It really needs to break this 332. If Goldman Sachs can't break this, it could be a potential problem here. Again, if banks start flipping and start selling off, that's going to be a concern. That's going to be your first insight that the rest of the market is going to potentially start selling off. Now, tech can hold us, I think, for a couple of days, and then the whole thing could reverse and start selling off. So again, always keep an eye on the banks and see where they're at. But yeah, that's pretty much what I got. I don't want to make this video too long. It's already long, and there's a lot of insight in the beginning of the video. So I appreciate you. Go ahead and drop a thumbs up. Until next time, I'll see you guys later.